Hey, how's my light? I don't have my light on. Do I look all right, Brandon? I'm good.
It's the ugly hat that's the problem.
This is the best thing in this frame right now.
Oh, it's a sad state of affairs for you there, Johnny baby. Hey guys, JC Parets here, founder of AllStarCharts.com, and I am joined, as always, Sean McLaughlin. What's up, my man?
What's happening, my man?
That's some hat you've got on there, some getup you're wearing there.
Go Bills. I was in Baltimore this weekend for that epic comeback, stayed in the Bills team hotel. I mean, it was just a wonderful, wonderful weekend.
Sounds like my worst nightmare. Why don't we get into these markets? October, you know, it's interesting. The month of October now, we're sort of new quarter. Willie looked back and stocks are up on the first day of the quarter, 7 straight quarters. How about that? Fun fact.
Well, I mean, it's not entirely surprising. I mean, what happens at the beginning of the month, right? People auto invest in their 401ks. There's a lot of money coming in, just blind money, just coming in, buy whatever. And that doesn't surprise me.
Are they dressing windows? Is that what's going on?
Well, look, windows? I mean, we had a terrible month in September, right? I mean, it's smart of the casual investor to be putting money into their dollar cost averaging schemes right now. Whether they're actually being smart or not, it's up for debate. But yeah. Hey, I don't hate it.
All right, so let's just rewind before we get into this week's trade. Last week's trade, we were selling naked puts in Berkshire. You know, perma bears pounding their chest, volatility's up, everyone's scared to death. I just like selling Berkshire puts in that sort of environment. Our target got hit in a couple of days. And now here we are, not Berkshire. We're looking at Brookfield Asset Management, sort of similar world, I suppose, to a Berkshire Hathaway asset manager. So not too dissimilar. Going back to the well, Shawnee.
Yeah, I mean, look, it's a very similar setup. I mean, the two charts look almost identical to when we put the trades on. I mean, little false breakdown, and you and I like to say it all the time: from failed moves come fast moves, and this looks like a repeat. And you were kind of joking before we went live, like, "Hey, are we going back to the well too much?" And I said, "Look, if you're thirsty, where else are you going to go?" And it's working. Yeah. So as long as there's water in that well, let's keep going back to it. And volatility is still high across the board, even though we've rallied, like you mentioned, pretty strong to start the quarter and start the month. The options market's still pricing in some fear. There's elevated options premiums pretty much across the board. And when a stock like this reveals a very significant level that we could lean against, that being right around 40, that's a great level to sell puts against, especially when the premiums are high. So that's what we're doing here.
I like how you quoted Brian Shannon there, from failed moves come fast moves. You Colorado boys stick together, I see.
Yeah, me and Brian are overdue for a hike. I got to give him a call.
Yeah, the two of you guys love your hikes. I love that. Yeah, I mean, listen, Brian's always, you know, I've been hearing Brian Shannon talk about charts for 17 years now, which is pretty crazy to think about, right? Since 2005. Yeah, 17 years. Wow, that's insane. And that's definitely something I learned from him. From failed moves come fast moves in the opposite direction. You know, and that's really the bet that we're making. It doesn't even need to be a ripper. It just maybe needs to hang out for a bit, let that premium deteriorate, and then we could collect that cha-cha like we did over the last week in Berkshire Hathaway. So Berkshire, that trade is behind us. Now let's talk about BAM moving forward.
So as you can see from this P&L graph, as long as it stays above 40, which is our strike on these short November puts, we stand to make some money. But there's one very important thing we need to pay attention to, JC, and that is there is earnings coming up before these options expire. There's earnings on November 10th. So if I think it's an unlikely event, but in the event that we're still in this position, we haven't been stopped out, it's still working, which, by the way, our stop out level is 40. If BAM has a closes any trading day below $40 a share, that's where we get out. That's the market telling us that we're wrong or we're early. Either way, we want out. That invalidates our thesis. But in the unlikely event that come November 10th, we're still in this position heading into earnings, win or lose, I'm going to take the trade off because I don't want to hold naked puts into a binary earnings event where we expose ourselves to a significant gap down risk. So on November 9th, I should say, if we're still in it, we're closing it no matter what, win or lose.
I like that additional layer of risk management there, Shawnee, with this specific situation of going into earnings and then just avoiding that altogether. I also like how you pointed out that that's a very rare, I mean, not rare, but it would be unlikely for us to still be in this trade by then. If we're going to be right in this, we're probably going to be right pretty quickly, in my opinion, especially looking at the rest of the market, looking at the S&P 500 successfully retesting those summer lows, NASDAQ 100 successfully retesting those summer lows, and the dollar coming off from, a very, logical area of resistance where if the dollar is going to start to come off, this would be a perfectly logical place for that to happen, a 161.8% extension of that entire, 4-year, 5-year base in the dollar index. And if the dollar's coming off, stocks should be moving higher. If stocks are moving higher, then an asset manager, in my opinion, is probably not moving lower. And those put options that we are selling, we are going to probably be able to cover pretty quickly at half of what we were able to sell it for, in a very similar situation to the old Berkshire trade that we went to last week. If you haven't seen that video, you can go to our YouTube channel, and that is there. And I want to add one more thing, Sean. We're talking about an asset manager. I really like capital markets in general on this pullback, retesting those 07 highs, those pre-great financial crisis highs for capital markets. So, really logical level for a kickback on that historic breakout to come to a conclusion, to completion. We can move forward from there. So I think there's a lot of tailwinds, in my opinion, for this particular name. And at the very least, we just don't want it to go down. It doesn't even have to go up. We just don't want it to go down for a couple weeks. Really, is all we need.
I love it when you bring up those charts that go back 15 years and go back to the great financial crisis, because we talk about those levels all the time as being very significant. But there are a lot of traders out there today that either weren't around trading during that time, or just they have such a short time frame that if you're not looking at that level and seeing that is a very important level, that the market has memory at that price, if you're not zooming out to that lens, then to you, this pullback to 70 just kind of looks like, no big deal. Looks like we might go lower. But no, man, that's a very significant level. And that's just one more reason why it's always important to look at multiple timeframes when putting trades on. Yes, you might be a short-term trader and you might only care what's happening over the next month or the next week, but you want to take it all in the context of, where are the important levels and why are they important?
All right, so let's go over this trade. So this is the Brookfield Asset Management, BAM.
Bam!
BAM, bam. We are selling the November puts. We're selling the 40s, right? We're selling?
Yeah, we're selling the 40s.
40
we sold them. Yep. We sold them for $1 even. I think they're still trading at around $1 right now. So that's where we're in at.
Perfect. All right, I like it. Selling the November 40 puts. If at any point it closes below 40, all bets are off. If we are still in this trade, in the unlikely event that we still are, on November the 8th, right? Is that the day before earnings, or November the 9th?
November 9th is the day we want to pull the plug if we're still in it, because earnings are on the 10th. We're
still in it. We out. It's somebody else's problem at that point, right?
That's right.
All right, I'm JC Parets, founder of AllStarCharts.com. This is the homie Sean McLaughlin. Make sure to hit him up on Twitter at Chicago Sean. Hit me up at All Star Charts, and we'll see you next week. Go sell puts naked.